unmuted. Oh,
Can everybody hear me? Hello? Anyone hear me?
I can hear you.
All right, thank you. We'll get started in about 2 minutes. So bear with us. No.
so do you want to just control the mute on that?
Yeah.
Okay.
I don't need one. Start the meeting. I think we have one public speaker. Yeah. I'll be right back. That's fine. Yeah, let me, pull up the agenda. Well, I don't know what you did. Molly, are these ours to keep now?
Yeah, those are yours. I don't want them in my office.
Okay. Can we get them autographed? Yeah. Where's the light at the end of the tunnel to keep it? All right, we'll call to order the Finance Committee meeting. It is 5:33, Thursday, August 20th. I'm going to do roll call. Myself, present. Mr. Hoffman. Present. Mr. Girls.
Present.
Mr. Fiducia. Here. Mr. Schultz.
Here.
Mr. McDonald.
Here.
And Mr. Butita.
Here.
And let the record reflect, we do have a full quorum. Our next item is public comments. I'm going to read this real quick as we have an individual here to actually make a public comment. This is the time where we invite the public to address the Finance Committee with issues and concerns. We ask you limit your comments to 3 minutes. Personal attacks or inappropriate language of any sort will not be tolerated. We will allow a minimum of 5 minutes with 5 speakers on a first-come basis with a sign up before the meeting. Speakers may not address zoning matters or personnel matters, or pending written litigation may not be addressed in open session. An individual may speak up to a maximum of 3 times per calendar year on the same topic. This prohibition shall include repetition of the same topic of the statement on what is purported to be a different topic. After acknowledgement by the chair, please stand, state your name. Thank you. All right, so we have Matthew Johnson. Is he here?
He is.
I'm here.
Yep. We give you the opportunity to speak. You have 3 minutes, sir. Thank you very much.
Thank you. And I think we need to mute the main room because I'm getting an echo. There we go. Okay. Everybody can hear me? That's good. Okay. I'm Matthew Johnson, the minister of the Unitarian Universalist Church here in Rockford. And I spend my time caring for the folks in my congregation and also working to improve things like early childhood education. And I serve as a chaplain at the Family Peace Center and encouraging a strong, diverse city where we care for each other. I'm also a taxpayer. And I am shocked by the fiscal mismanagement of the Sheriff's Department. Apparently, they've spent 10% more than they were allocated for the current fiscal year, which ends soon. And now they need us, the taxpayers, to fill the hole. If I spent 10% more than the congregation that I serve's budget, and I did it year after year, which the sheriff has done, I might be fired. I would surely have my credit card authority revoked and a finance committee member assigned to watch over me and what I spend money on. When this county is about to face a huge fiscal disaster because of COVID and the economic shutdown, and when our whole nation is wisely rethinking how much we spend on policing versus social services like early childhood education, The idea that the sheriff gets to spend whatever he wants and we're just supposed to say, okay, is absurd. Cutting the sheriff's budget would not actually be that hard. He needs to make choices about where his deputies go and when and what their job is. In my opinion, they should serve the unincorporated parts of the county, manage the jail, deliver warrants and orders. But instead, they organize drug stings, they create military-style saturation patrols, and the like. We cannot afford this. And it actually doesn't make us safer. Studies are pretty clear about that. And even if you don't agree with that particular view of mine, surely you can agree that no taxpayer-funded office should get a blank check. There must be a limit. What has happened here is a dereliction of your public duty as county board members and the sheriff's legal responsibility to only spend what's allocated. Indeed, it's a crime, a misdemeanor, but still a crime, to spend government money beyond what has been allocated. And how can somebody enforce our laws if they don't follow them? Maybe you have no choice but to pay for this overspending out of reserves, but you can't let it continue. You must insist on an independent audit of the sheriff's office and something like a citizens commission to oversee their spending. Not other officers, even retired officers, but people who are skeptical and independent and have authority to ask hard questions and look at the books and say no to this reckless overspending, which has gone on too long. And I and others can suggest names for who they might be on that commission, but you must create it and empower it. Or failing that, do that yourselves. Ask these hard questions. This kind of reckless overspending for something that doesn't really work year after year cannot continue. Thank you very much for listening.
Unmuted.
Thank you, Mr. Matthew Johnson, once again for your comments. We'll move on to our next item, which is a presentation of the 2019 audit by John Rader and Baker Tilly. And I think he's on the line, if I'm not mistaken.
We are on the line.
All right, the floor is yours, sir.
Okay, thank you very much for having us. As mentioned, my name is John Rader. I'm a director with Baker Tilly, and along with me is Cassandra Chase. And Cassandra plays a big role in the audit. She's a manager on our team and has been involved with the county's audit for the last few years as well. We're going to share this presentation, and we're going to share our screen. I believe we have, I think, and I hope we have the option to do that. So thank you, Cassandra. I'll start us off, and then I'm going to turn over to Cassandra to actually talk about the numbers, and then I'm going to wrap it up and just mention a few things in the internal control or management letter report. As we go through this, please ask us questions. You can stop us, mid-sentence if you want, or you can wait to the end. It really doesn't matter, but that's one of the things that we are here to do is answer your questions. I wish we could have met months ago. We actually concluded our audit back in March, and then everything, as we know, our world changed. And so everything kind of shut down, and we've struggled having some meetings. So I'm glad Steve could arrange us to meet with you tonight. You all have this handout in your materials, but it doesn't really matter because we'll kind of walk through it as we share the screen. I'm not going to mention much about the first couple of pages here, other than we've had a consistent team for the last few years, which is helpful. From our side, I think we get a much better quality audit because we're not trying to figure things out. We're really focusing more on auditing and understanding the risks, and Molly's not having to teach us everything. So we bring a big team because it is a big audit. You have a very large report, one of the largest ones that of the hundreds that we issue out of our firm. So it takes a big army kind of to go in there, and all of us just work on governmental audits. That's all we do all year long. So we do have a solid team. As far as the status goes, like I said, we finished up in March, but we start this process doing 2 or 3 days of what we call preliminary work. And during those days, in early winter, I think it was November, December, we were at the county. We're really focusing on sampling and testing controls of our payroll and journal entries and a lot of other things, doing departmental visits, going through a lot of planning documents, reading the minutes of your committee as well as the board, and meeting with Molly and others to kind of set the stage for when we come back. And so then we did come back for a week in January and another week in February. And we were on site, which is really wonderful because, like I said, come mid-March, we stopped doing audits on site. Everything's been remote. And while that's gone well, it's presents some logistical challenges that we didn't have to deal with when we were at Winnebago. As you probably know, our firm prepares the CAFR, the Comprehensive Annual Financial Report, the financial statements for the county, just like we do for almost all our governmental clients. It just takes a lot of resources to pull this together. And with all the accounting rules that are issued every year, that's a challenge. So we prepared that for the county. We issued a draft on March 6th, about a month after we were there. So pretty quick turnaround. The county prepares, Steve and Molly prepare some documents for us to review, kind of go back and forth, we get to a good place. And so we issued finals on March 27th, actually within a day of what we were able to issue in 2018. As it points out on this page here, the status of the audit, we issued what we call an unmodified opinion. And unmodified is basically a clean opinion. It means your financial statements are prepared according to the accounting rules or generally accepted accounting principles, GAAP. And that one of the things that's required to do that is to make sure you implement the new GASBs, the new accounting rules. So this year there was one new one that was effective for Winnebago, and that was 88. GASB 88 didn't change the numbers, but it just required some additional debt disclosures over direct placement kind of debt that you don't go to market with. So some additional disclosures, pretty minor change on that. Sometimes there's a misunderstanding of what an audit is. And I just want to, this page hits out a little bit, some materials that we can use as part of your audit. Next year, we just move to it, explain that a little bit more, because we have certain responsibilities and the county has certain responsibilities. But the objective of an audit is really to make sure that we are able to plan and perform that audit to basically get reasonable assurance about whether the financial statements are free of material misstatement. So it's just that, it's a financial audit. It's not a forensic audit. It's not, I know our firm has provided some consulting services with very different kinds of recommendations that come out of that, where materiality isn't, they're not focusing on the numbers per se, it's more operational. So this is really a financial statement audit. And I think everybody in the room understands that, but I just want to clarify that because sometimes there is a misunderstanding. The other thing that we do is we make sure that we assess the internal controls. So like I mentioned, those first few days of the audit, that's where we're spending a lot of our time so that we can get some reliance upon the numbers that are in this system. The last bullet point on here is talking about the other audit that we do each year, and that's for your federal awards. You're part of the single audit, as they call it. And so we tested 2 or 3 different programs, I believe, in the health department, and completed that as well. So with that said, unless there's questions on this kind of high level stuff, I'm going to turn it over to Cassandra and she can talk about the numbers.
Thank you, Ian. Thank you.
I'll talk to you later.
Thank you very much. Status of audit, that's what we're looking at, Baker Tilly.
Yep. Okay. Cassandra, you want to talk about the numbers?
Yeah, sure. Sorry. Thanks, John. So hello, everyone. Thanks again for having us. We appreciate everyone's time. So first, I'm going to talk about the general fund financial results, specifically where the general fund balance ended for fiscal year 2019. That starts right here on this page that I've got up on the screen. So the numbers here are showing how fiscal year 2019 fund balance is calculated, which is taking total revenues and other financing sources, less expenditures and other financing uses. And then that gets you to net income of about $3.9 million for the general fund, which then leads to a total year-end fund balance of about $20.7 million. You also see final budget amounts in comparison to actuals. Revenues you'll see have a favorable variance from budget of about $1.6 million. The key drivers of this variance were replacement and use taxes, which actually came in about $2.4 million over budget. And then you'll see here expenditures actually had a favorable variance as well of about $1.8 million. And this was largely driven by non-departmental, public defender, assessments, and clerk of circuit court expenditures all coming in under budget for fiscal year 2019. All right, so moving on to the top of page 6. So here you'll see a chart showing a breakdown of general fund balance over the last 3 fiscal years. And just below that chart, you'll see the specific amounts then that make up fund balance. You've got unassigned, assigned, and non-spendable fund balance categories. Looking at the amounts for specifically fiscal year 2019, you'll see non-spendable fund balance increased significantly from previous years, landing at about 4.3 million. So this increase is mostly driven by an increase in advances to other funds, and that amount sits on the receivables section line item on the general funds books in the financials. The 4.3 million advance, that includes 3.2 million of funds borrowed from the River Bluff Nursing Home. About 800,000 was to Public Safety Sales Tax Fund, and then another 200,000 to other non-major funds. Because this is general funds cash, but it's currently tied up in a receivable or an advance, this is shown as, again, non-spendable fund balance. And then the 200,000 assigned that you see here, that's set aside for future capital projects or acquisitions. And then the remaining unassigned fund balance is lumped into the unassigned category. All right, so next let's move into the minimum fund balance policy, this section down here.
I'm sorry, can I back you
Yep,
up?
go ahead. No problem.
Can you help me understand why we had this huge increase in receivables during the 2019 year?
So you're talking about the advance then that I was speaking about that's wrapped up in the non-spendable fund balance. So like I said, a big chunk of that, 3.2 million of that was to the River Bluff Nursing Home, and I'll actually touch on that a little bit more here in a little bit. But I believe that was due to some tying up of cash, which had to do a little bit with billing. I think John's going to go over this a little bit more. We've got a recommendation pertaining to that fund where we'll touch on some details regarding that in a little bit.
I will. I can add to that. What it really, like Cassandra said, I'll get into a little bit more, but what it really equates to is those two funds, River Bluff and the Public Safety Sales Tax Fund, having negative cash. And GAAP doesn't allow you to present a fund with negative cash, so we had to zero it out. And the only place you can get it from is the general fund. So the general fund is a sense, like as Cassandra said, advancing, but if you can think of it as like loaning those two funds cash at year end. And you'll see why they needed that as we kind of move through here. So in a sense, it ties up your general fund balance.
Right.
Does that kind of answer your question as far initially?
Well, you both said that you're going to cover this, so I'll just let you cover it.
Sounds good.
Okay, so next I'll move into the minimum fund balance policy and calculations. The county's policy is to maintain unassigned fund balance in the general fund and the Public Safety Sales Tax Fund equal to 25% of the current fiscal year's expenditures in those funds. So you see the calculations down here. So the minimum requirements is shown on this line here. So you'll see the general fund's actual unassigned fund balance results are about 4.4 million over the requirement, while the Public Safety Sales Tax Fund is actually underfunded by about 2.8 million. So for fiscal year 2018, this fund was overfunded by 3.7 million, and the underfunding in 2019 is largely driven by the fund's net loss of about 4.6 million. And this is due to a high rate of spending, not enough revenues to cover the costs in that fund.
I have a question regarding that, if you don't mind.
Sure.
So from an auditor's perspective, say for example, we do go below that 25% policy that we currently have in our books as part of it, what implication would this audit report, would that be essentially a finding that you guys would report on that, or how would that affect essentially part of the audit as a whole if that policy is not obviously foreseeing that 25%?
Yeah, that actually gets disclosed in the footnotes of the financial statements as well. And so it's not like it's a compliance with a grant or anything like that. It's more of an internal policy. And so GAAP does require that if you have a minimum fund balance policy, that it gets disclosed. and stated within there where you're at. So that actually is in your financials.
Thank you.
Mhm. Good question.
Okay, moving on to page 7 are the financial results for other major governmental funds, as well as total results for all non-major funds. You'll see the Illinois Municipal Retirement Fund, Tort Liability Fund, and non-major funds all generated net income in fiscal year 2019. Whereas the Public Safety Sales Tax Fund, as I previously mentioned, had generated 4.6 million net loss. And again, at this rate of spending, we do anticipate that this fund could likely have a deficit fund balance then by December of 2020. Any questions on this page before I move to the next? Okay, so on page 8 are the financial results for the enterprise funds, which are in nature self-sustaining funds as they charge, as you know, user fees to cover expenses. 555 North Court Street and the internal service funds both generated positive net position, while River Bluff Nursing Home experienced a loss of about $1 million. And we kind of mentioned this earlier, but just a couple things worth mentioning. Again, that fund had a cash deficit at fiscal year end, which again required the borrowing of that money from the general fund, as we explained before, which relates to that 3.2 million advance tied up in non-spendable fund balance. And also River Bluff's receivables are up 1.3 million or 17% from the previous year. And then again, in a few minutes, John will touch on kind of our recommendations pertaining to that fund. Yeah, Steve?
Yeah, thank you.
I'm sorry.
I just, is it all right, Mr. Chairman?
Yeah, go ahead. I'm sorry. I didn't see your hand up until someone told me. So go ahead.
So of the $4.3 million of River Bluff net, the net asset position, what you're saying is the reason they had such a large, you said over $3 million cash deficit, is because the bulk of that 4.3 million is tied up in receivables?
Yeah, it is. I'm pulling that fund up right now. And when we talk about, getting to that page. Yeah, that's exactly what I've expected. So that $4.3 million is, like it stated, the total net position. However, keep in mind, 3.3 of that is tied up in capital assets. Represents the building and everything else that they have out there. So that only leaves you with about roughly $1 million in liquid net position. And so when your receivables represent 9 of it, you can see how that plays out. And that's why it has negative cash. So it's got a big negative cash and a big receivable that covers some of that up. But that actually, because this is obviously full accrual, this fund is, that's why there's these numbers playing out like they are.
So the negative cash position was that negative 3.3 million?
Correct. Yep. That's exactly right. All coming from the general fund.
Thank you.
Okay, lastly, I'll move into page 9. So the first section of this page is showing the legal debt limit and how that's calculated. So per state statutes, the county's indebtedness must not exceed 5.75% of the total equalized value. So that debt limit calculates to about 220.7 million. And then at fiscal year end, the county had a total general obligation of 12.72 million. So just 5.76% of that actual calculated debt capacity or debt limit is being used. And then this last section down here shows debt service expenditures compared to total governmental expenditures. So the total principal and interest paid in fiscal year 2019 was 18.7 million, which is 11% of the total non-capital expenditures of 170.8 million. And you'll see this is comparable to the prior year's 12%, and this percentage has been very consistent over the last several years. Any questions specifically on debt and how all this is calculated? If not, I'll pass it back to John.
Sure. I just want to add one thing. The most important thing for debt is like Cassandra said, it is consistent and there's good debt management. And I know the county works with their municipal advisors to make sure of that. So these numbers, you only see 2 numbers up here, 2 years of numbers up here, but they have been very consistent for the last several years, 5 or 6 years. So, and this is typically, these are very close to a lot of the numbers that we see for other counties that we audit too. So no real concerns there. Yeah, so I'm going to mention just very quickly on the next 2 pages before I jump in the manager letter, a couple things. So these are the required communications, the next 2 pages here that, again, I won't run through them, but these are things that are on all our audit reports for everywhere we audit, government, not government. And it hits on different things like there are some estimates that are in your financial statements. And so what do we do about that? Well, we're looking at the underlying assumptions to making sure that they make sense, that the county thinks they make sense. Uncorrected and corrected misstatements. We actually did not have any material journal entries for the county this year, which is really commendable because, you know, Winnebago's a large governmental entity and there's a lot of transactions going through. So Molly and her team really do a fantastic job of preparing, not just for year end, but throughout the year as well. So we don't see that very often. I usually have a couple audits a year out of the 30 or so that I do that we don't have material entries. I think we have some smaller ones, but they were really just 1 or 2 small ones of that. No disagreements with management or any of these other kind of things. So yeah. And lastly, or actually two more slides before I jump over. The next one was talking about the upcoming GASB's or accounting rules. And when we issued this back in March, they were up to 91. I think they're up to 98 or 99 now. I don't know if they just found extra time, but they haven't slowed down. So next year for the county, 84 is going to be effective. That's going to take your agency funds and create like a modified income statement. I went through this, we went through this, I should say, with several of our county clients over the last year. And it is a little bit extra work, but we feel comfortable on how we're going to approach it. 87 is a big one as far as capital leases go. And 87 and everything after that were delayed. And 95 was something, was a standard that GASB issued, I think it was April or May. They basically said because of COVID-19, we're going to allow governments throughout the country to delay implementing any future standards by 1 year. With the exception of 87 leases, they said we're going to delay that by 18 months. So it's effectively 2 years for the county, which gave everybody some much needed breathing room to focus on much higher priorities than implementing these changes. Now, not all these changes will affect the county, but certainly some of them will. And we've got some more detailed information, some of the things that we provided to the county versus just this listing here. And then the last page here is where I'm going to ask Cassandra to stop sharing her screen because I'm going to share my screen or try to. There we go. Okay, I think everybody can see that.
Yeah.
Okay, great. So this is the other document that we produced for the county, and it's titled, as you can see here, but it's more commonly noted as a management letter or internal control report. I'm not going to walk you through all of it, but this kind of hits on some of the items that we've been talking about, and so I do want to touch on them. There are these opening current year comments regarding internal control environment. These are the major transaction areas that we look at, like how do you process payroll and everything else, and some of the things that came up in the department. So each one of these, we're looking for some additional controls. The schedule of expenditures, the county does a nice job of preparing it, but we did have some changes to it. So we're looking for somebody else to be more involved with that, to give it more of an independent review before it comes to us. Highway periodic year-end physical inventory counts. They've been picking up salt for the last couple of years at our recommendation, which is a pretty significant number, but they also have a lot of parts out there. So accounting for that, picking up his inventory and creating a better inventory management system, I know is something that we've talked to the county about, and I know you've talked internally as well. And then lastly, the purchasing. There is a purchasing policy, but it's not being consistently adhered to throughout the county. Really comes down to educating departments. I do see this a lot with places that have some do a good job and some do not. But this probably needs to be revisited at some point in time. Then at the top here, this is another new comment that is still focused at the highway department. It's more of a best practice, I would say. Although there is a control aspect because it has led to misstatements in the past. There are projects that are for local agencies that get billed out, and typically it's been an issue as far as waiting information coming from the state before they are billed, and basically the county collects on those, which creates this pretty significant delay, and sometimes projects are done, receivables are missed, and so what we're asking for is to kind of strengthen that and get highway more involved in monitoring those projects from an accounting standpoint, and then working with finance at year end to make sure those receivables are being captured. Ideally, billing for those too, even if it's just based upon a preliminary estimate, so that it helps the cash flow of the county. And then we're down at the bottom of page 3 here. So we're back to River Bluff, and there's 5 or 6 things noted in here for River Bluff. And when we were out at the county, Molly and I and Steve met with the director out there and consultants and talked about some of these issues as well. And I know there's a lot of challenges going out there because of COVID-19 and everything too. So somewhat caught up on the issues, but as far as things that came up during the audit, these first 2 items have been in our report for the last 2 or 3 years. With all those receivables, obviously they're not going to all be collectible. And so there is an estimate of an allowance that's been established. It's a very simple approach that the county is using to just apply a percentage. That works, but it's probably not nearly as accurate as it could be if they did what we call a look back analysis to see what did we estimate last year or what actually came in. And there's a process for doing that, and it gives you a better idea of what that allowance should be. So that's, again, kind of a best practice on that one. The other item down here in the second paragraph talks about the inventory process going out there. And as far as the controls around it, as well as the way that they're costing it, is not actually GAAP. They're just using the last purchased item and applying that price to all the inventory. Where GAAP would say more about average cost or FIFO method. But then there's a couple new things here, and this kind of leads into what we were talking about the kind of deteriorating financial position of the nursing home. And the billings, cash is way down. We talked about that, it's negative. Receivables are way up, and I forget the percentage, but it was a pretty big percentage increase. And was largely driven by the fact that there weren't any billings going on for quite a few months leading up to year end. It just kind of fell off. And I know the county has been trying to address that, especially recently, but billing on a regular basis, there's no better way to bring those receivables in and avoid the write-offs and improve cash management in nursing homes. Billing should be a big focus. Also, there are, when you look at the resident accounts and the detail in the point-click care system, you can see that there are a lot of credit balances being applied to individuals. And while this is, we do see this, all nursing homes we audit, these were quite significant, that amounted to about $1 million of credits. So these need to be evaluated by management out there on probably at least a quarterly basis, and especially at year end, if not more often, to try to resolve some of these. Perhaps some of those credits actually need to be recognized as revenue, but they should be kind of thoroughly gone through, is what I see at other places on a regular basis. And then lastly, this system that they're using, it's a common system, but the challenge is that it was not getting reconciled to the county's Munis financial accounting system, and it really needs to on a monthly basis. And that's a critical part of financial reporting, because Munis is what the county is using. And while it's okay and normal and acceptable to be using a subsidiary system for an operation like this, it needs to be interfaced and reconciled to meet us on a regular basis. So those are the things that came up and were discussed as far as River Bluff. The health department, a little bit different story. We've had a comment in here for the last few years, and I know that the previous auditors did too, about some issues. I'm not going to run through this. About half of these were resolved last year in 2018, and the other ones were resolved this year. So this comment is going away, which is what you want to hear, I'm sure. Things went very well with the health department. We didn't have any entries for them. They were very well prepared, and things were in good shape. So these items were resolved, like I mentioned. And the sheriff, the county auditor did that report back in 2017 about the decentralized accounts that they have out there. That's some really excellent recommendations according to statutes and such. And so for the last 3 years, we've been out there ourselves to kind of follow up on these. Once again, there were no changes to this. It's the same situation with the exception of one account, and that's the jail commissary fund. That was brought over to a special revenue fund as it should be. But there are still all the other accounts that are in existence and are not being accounted for correctly. So again, the recommendations of the county auditor's office in our minds still stand. It should be taken seriously. So I'm going to pause there, see if you have any questions. This last point is more of just an informational point about decentralized collection points, but I anticipate you might have some questions on the things that I just talked about.
Does anybody have any questions for the auditors? I do have a question on the receivables, if you don't mind.
Yes.
River Bluff. Do you guys deal with a little bit on different nursing homes that might have receivable outstanding to see if of a recommendation that potentially could help out? I know that big part of ours is the Medicare part piece of us from the state coming down the funding. So there are some delays there, and the receivable obviously continues to increase on that aspect of it. But is there anything from your perspective, from your practice, that you've seen across the board that potentially could help out the nursing home as a recommendation? I know that you're not into to give recommendations on that aspect of it, but have you seen across the spectrum?
Yeah, this is definitely a highly, as you mentioned, a highly specialized area. And as auditors, that's not something that we specialize as far as what we need to do to audit these types of activities. But as far as making improvements, my understanding from, the 20 years or so I've been auditing places with nursing homes is that, like I said, timely billing quite often that's going to involve bringing in specialists if you don't have the resources internally. I've seen that at a number of places. At least on a temporary basis, and to have, more than one person doing it as well. And with the involvement of management making some decisions on these. So it's the nursing homes that I've seen actually be financially viable over the long run, bill on a regular basis, they keep their beds filled, and they do that through a number of different methods. So probably not the answer you're looking for. It's more of a kind of a consulting issue, and I know that the county's been working with consultants to make some improvements in this area.
Thank you.
Mm-hmm. Yeah, this fund and the public safety sales tax fund are the two kind of concern areas that I know I have to believe that the county is already well aware of. You can see how it all kind of surfaced in your last set of financials that we've been working through, and talking to county staff, I don't think the situation is completely turned around. If anything, it's gotten tougher during COVID-19 and all the challenges we have. If nothing else for Cassandra and I, yep, question?
Go ahead.
Can I ask a question?
Yeah, hold on. Mr. Schultz had his hand up first, and then I'll go to you, Mr. Arena.
Okay, thank you.
Thank you, Mr. Arena. I appreciate your patience. I think you were ahead of me, but I had two questions for you. Right now, we've gotten preliminary projections for the current year having a deficit of 1.3 million plus a little, and the following budget draft having about a $7.4 million deficit for combined for the 2 years of about $8.7 million for just the combined general and 1% sales tax. So as we are evaluating, obviously that's not great news, $8.7 million over the subsequent 2 years from your audit. What would you tell us are the implications of that? What would you help us to understand? Okay, what does it mean that that's what we might be facing or what might actually happen?
Yeah, from talking to my clients over the last few months, it's obviously a very challenging situation. So doing those projections, the cash flow analysis, anything you can do to kind of anticipate it. Most of my governments have been working to figure out how much fund balance can they apply towards this. And I guess that's a good thing. The county's general fund does have, $16 million of unrestricted or unassigned fund balance at the end of the year. So that gives you some flexibility, and it's, has some in excess of its policy. So that's going to help somewhat. The other thing is, pursuing as much of this CARES Act funding as you can. And of course, budget constraints. That's kind of a threefold attack that most of my governments have been doing, hopefully trying to weather this as much as possible.
In terms of the actual day-to-day implications, I'm trying to figure out, for example, are we going to be in a tax anticipation bond circumstance? Is that kind of the fallback when your seasonality of cash flows require you to go negative at a certain point? Is that what you see with other entities that face that?
I haven't seen it get to that point, to be honest with you. But I suppose that would be one possible option, because you can't pursue a lot of other borrowings because they're restricted to capital purposes.
All right. The other question I had was just, all right, we're dealing in a scenario where we have a particular elected official who spends beyond their budget on an annual basis, regardless of what the budget is, and that has been the primary contributor to our problem. And so, my question is, as you've dealt with other counties, has there been any kind of, action that has been effective in dealing with a situation like that?
It's more of a management question and a question of legality. So I'm a little bit hesitant to go in that area. I do know some places that won't allow payment of claims if it exceeds budget authority. The system basically won't let them be paid. So I'm not sure what you do within Munis, but your financial system, but that is certainly something I've seen at other large entities where you have your spending authority and everything above and beyond that is just not paid. But I know it's more of a complex mix going on in Winnebago right now.
Okay, thank you.
Mm-hmm.
Rena, go ahead.
Am I up?
Yeah, go ahead.
All right. Thank you, Mr. Chairman. So a question about our fund balance and the minimum fund balance we maintain in the general fund and the public safety sales tax of 3 months. Is that amount typical of other counties, or are we maintaining a higher balance or lower balance than is typically done?
Yeah, that's a good question. And actually that is typical. So the Government Finance Officers Association, GFOA, out of Chicago, kind of a national think tank, they always recommend a minimum of 2 months, so about 17%. Most places that we audit on average are around 30 to 40%. So your policy is, within that ballpark. Certainly not excessive from what we see at other places. the most important thing is to have a policy. So this policy has been in place for some time, I believe. And, you know, adhering to it is important.
Okay, thank you very much.
Mhm.
Mr. Kelly, do you have a question?
Maybe a little bit more of a comment. As a former Rockford School Board member, I know full well about tax anticipation warrants, and we don't want to go there. We do not want to have to borrow against next year's revenue to cover this year's expenses.
Mr. Kelly? Mr. McDonald?
Thank you, Mr. Chairman. A really quick question, Mr. Ritter. Maybe you don't know this answer, but I'm curious of the other counties that you audit. Are you privy to the percentages? You know, their health departments, their sheriff's departments. What percentage of their budget goes to different agencies?
Not off the top of my head, I'm not. It's a good question. There probably is some analysis out there somewhere. Yeah, if we do audit a lot of the larger counties in Illinois, so I could try to get you some data.
I would welcome something like that. I'm very curious if we're spending money similar to other counties in the same areas.
Yeah, give me a little time, but I'll try to get you something, Mr. McDonald, in the next couple of weeks or so, that I've seen from a kind of a representative sample. What are the different departments you mentioned? Public, you know.
In general, the health department, the sheriff's department, the state's attorney's department, just in general, kind of how they break their budget up and where they put their emphasis.
Yeah, I'll see if I can get some percentages.
Thank you.
Mr. Chapman?
I just want to comment, John and Cassandra, for the professionalism which you bring to the audit and that. I think you work well with our people, and I'd also like to thank Molly and her staff for the job they do, because when you're talking about 150 different funds, dealing with all the aspects that you have to, that's quite a job. So thank you.
Thank you very much for the comments. And we echo that for Molly. She does a great job.
All right, Mr. Schultz.
Yeah, thank you, Mr. Chapman, for making that comment. And I appreciate you as auditors pointing out that, you know, maybe a couple of counties out of 30 or so is what I heard you say, didn't have any material adjusting journal entries, which really is elite company. And I appreciate you recognizing Molly and the team, and we do appreciate your efforts as well. But I just, Steve, what an outstanding job, Molly and the team, and please report back to them the gratitude of this committee and the county board.
Just for the record, Molly's in the room.
You just heard upstate.
All right, any more questions for the auditors or comments? All right, is that the presentation, I'm assuming?
That's the end of it. Yeah. Other than to say thank you very much for having Baker Tilly in as your auditors. We appreciate it and enjoy working with everybody at the county.
Yep, I echo that. Thanks, everybody.
Thank you, guys.
Thank you. Good night.
Yeah. All right, we will move on to our next item, which is a resolution identifying acquisition contracts to an installment purchase agreement. Herefore entered into the county of Winnebago, Illinois. Can I get a motion and a second? Mr. Hoffman, Mr. Fiducia, second. Thank you. The items before us, and I'll hand it over to Mr. Chapman.
Okay, thank you, Mr. Chairman. This is kind of a follow-up to the ordinance that we approved where we borrowed the money for the firewall improvements that we're doing. We're required to do this follow-up resolution to reflect the kind of the purchase order that we issued for that funding that we did, the $400,000. So there's purchase order to CDW government for $349,000 for the hardware. And then there's another purchase order to Harlan Business Systems for $49,985 for the installation of that software. So this is more housekeeping, but it's something that we need to do.
Any questions regarding this item? All right, seeing none, we'll take a vote. All in favor of approving the resolution, please signify by saying aye or raise your hands. Aye. Opposed? All right, the ayes have it. Thank you very much. We'll move on to our next item, which is a resolution identifying revenue increases on the budget reductions to offset the sheriff's budget amendment 2020 increase of $2,723,523. Can I get a motion and a second? Mr. Fiducia, and then can I get a second from Mr. Hoffman? So the item is, and Mr. Schultz, thank you. The items before, I'm going to defer to Mr. Schultz and Mr. Arena if they want to speak up on behalf of this resolution. I'll give them the floor. If not, I can go into details as well. So the floor is yours, Mr. Schultz or Mr. Arena, if you want to talk to it, and then, I can follow up as well.
If I can speak first, I just want to say this resolution isn't necessarily a conversation about the need, the justification of the budget amendment. It's more money management and how we deal with things. I think it was fortunate that we had Baker Tilly in tonight because, they made it clear that the policy we have in place to maintain those fund balances are important to uphold. And so I think we have to be very careful about making a deliberate decision to spend below them. And so last year at budget time, I reached out to my constituents with questions about, taxes and the sales tax and whatnot. And I got a lot of strong response, and it was to make cuts. People tell me that often, don't raise taxes, make cuts. But I think people say that without fully realizing what that would mean. And I think what we need to engage, this resolution should motivate a conversation in the community to discuss, what services of Winnebago County are considered essential that people absolutely don't want cut. What might we cut? If we're not gonna spend down below the fund balance, that minimum threshold, and people don't want taxes raised, something has to give somewhere. So I hope that this will become a conversation starter, again, not just for board members, but for the community at large. And I'd like to hear, I'm sure Mr. Schultz has some ideas too. Thank you.
Yeah, no, I appreciate the opportunity. At the same time, I know that I have essentially worn you all out with my consistent speeches about not spending beyond budget and living within our means and not spending down our fund balances. So I think the resolution speaks for itself. Mr. Arena has articulated, I think clearly what our challenge is and our opportunity. And, really we have a choice, obviously, and we know that. We can just say, we're going to kind of look the other way as it relates to the implications of our votes and just ignore the fund balance. Or we can say, no, we actually care about it dropping beyond just lip service and say there has to be something on the solution side. And I'm honestly, I'm weary of this battle. And so I'm looking for other board members to stand in the gap, to step into it, and help actually provide the impetus, the motivation, the energy to solve the problem. But frankly, if you don't, then I won't beat the table. I'll vote against a deficit budget, that. But it's time for others to step up. Thanks.
Thank you, Mr. Schultz. I believe Mr. Kelly has his hand up, so I will go to Mr. Kelly.
Thank you, Chairman. Expenses cannot exceed revenues forever. It's totally unsustainable. It has to stop. The sheriff needs to learn that we need to start with an agreed amount as to what his revenue is from the county, and then he can tailor his expenses to fit it.
Thank you, Mr. Kelly. Is there anyone, any questions or comments regarding the resolution on the table? Yes, I'll go to Mr. Fiducia and then Mr. McDonald. So Mr. Fiducia, you have the floor.
Thank you, Mr. Chairman. This resolution, this is just, all this is doing is, I got questions. It's asking the county board to go ahead and identify the $2.7 million, where we're gonna get that if we pass that budget amendment, correct? That's what the resolution is. Okay, and with that being said, are we supposed to then assume that we have 150 funds? Out of those 150 funds, how many of them can be reduced?
So I'll answer that question. So from the perspective, the way it is it's a twofold, right? It's the idea that the sheriff will somehow look at his budget and try to make reductions within his own budget because it is his budget amendment, whether he can absorb it or not absorb it. But ideally, what we want to do is instead of waiting till the last minute and saying, well, we'll just take it out of the general fund, it's going to force us to essentially assess where the reductions potentially are going to come, whether it's out of those 150, we take a slice or whatever, and you make those reductions that direction as a whole. But ultimately, at the end of the day, this is not going to prevent or stop or anything of that nature. If the board decides, this budget amendment goes through, then most likely, if you can't find the reductions, it's going to come out of the general fund, essentially reductions. It's going to hit our reserves, right?
Okay.
And so what we want to prevent. Yeah, go ahead.
Because I need to wrap my mind around this. So what you're saying is if we don't make these cuts, we're going to have to take this money out of the reserves, is that correct?
That is correct.
Okay. I guess over and over again, I've been hearing this, for the last 4 years, I've been hearing this, and I've been fighting this battle for I don't know how long. First of all, I get sick and tired, and this board doesn't have the stomach for it. You guys, my colleagues don't have the stomach for this. I don't care. I'm telling you like it is. We got to make some tough decisions here. Everybody's going public safety first, public safety first, public safety first. Well, okay, let's let public safety go first. I'm good with that. Don't cut them. But if we're not going to cut public safety, which I don't think we should, because it should be, if that's what my colleagues want to do, the majority want to do, if they want public safety not to be cut, I say don't cut them. Don't cut them, because you know what? Take your mind off your elections. Don't cut them. That's what we've got to do. But we've got to identify the other areas that we are going to have to make some cuts in. And it's not going to be pretty. Now, I'm going to go down memory lane a little bit. And 37 years ago, Mr. Chapman, I think Sheriff Caruana probably could remember this because he was working for the county at that time. We drained down our reserve fund. Could you tell this committee real quick what we had to do? Because I lived there.
Well, we laid off quite a few in the business, including deputies and sheriff.
And I lived through that. I was a little baby. I lived through that on the county. Okay? And so we're going to have to make some serious cuts. Now, whether the sheriff decides he wants to, and this is what my problem is. You build your department around the budget. You don't make the budget around the department. And so many times, every year, I'm seeing us where we're building our budget around the department. You know, we're saying, okay, we gotta make our budget, but we gotta, I say, leave public safety alone, because I don't believe my colleagues have the guts to do the right thing. Because you're all gonna say public safety first, public safety first. You know what, you're playing a game, you're playing with the role player here. Because I can go out and I can find people, I can find a lot of people that have got a lot of experience in this type of work that tell me different. But you wanna know something? You guys aren't getting it right now. And I'm picking on all of the guys on the board right now, because trust me, you're not getting it, because there's ways we could reduce it. One way we could reduce it is we could take an ordinance prohibiting the amount of employees the sheriff's departments get. We could do that, but I don't believe my colleagues have the stomach for that. I don't want to do this. I think what we need to do is we need to go get all those funds that we have. We have all those funds that we get can reduce and make the cuts. Give till it hurts. And I'm sorry I got on my soapbox, but I want to tell you something. I don't believe we don't have the guts. We don't have the guts to do it. Because you want to know something? We're all worried about what's going to happen to us in November. And the situation is, we're going to have to make some hurtful things, because what's going to happen is, when you laid off people, Mr. Chapman, was that pretty easy to do? Because I know people's lives that got destroyed from that. And I remember this, and it's gonna happen again. And you wanna know something? I'll be calling you guys up laughing at you when that happens. I'm sorry I said that, but I mean it.
Thank you.
I mean it.
Thank you, Mr. Paducah. Mr. McDonald.
Thank you, Mr. Chairman. Like Ms. Arena, I've also spoken with my constituents. Oh, by the way, first and foremost, the speaker in that room sucks. I'm glad I stayed home tonight so I could listen to it. We need to look at a different speaker, because you guys are very garbled in there. So I don't know what needs to change, but that speaker is not doing you guys any justice. But anyways, like Mr. Arena, I spoke to many of my constituents as well. And I asked what they expect out of the county. If we had very, very limited budget, in which we do, name me the top two things you would expect out of the county. And pretty consistently, the constituents I spoke with were public safety and infrastructure. So that makes public safety and the highway department important to me, because those are the things people look for to show safety, comfort, reasons they want to stick around in our area. And to be honest, we're from Illinois, and it's a very real problem that we're having is population loss. Going to the sheriff's budget, I've said it before, and I'll say it again. And Sheriff Caruana is not the first one that's complained or not able to stick to his budget, but I don't feel that in my time on the board, we've properly funded the sheriff. We haven't given him the resources he needs to do his job properly. Mr. Fiducia knows about domestic battery situations and how risky it is sending one deputy into something like that, how we're setting ourselves up for a liability, a lawsuit if something bad were to happen to one of our deputies because we've got minimum manning. So Mr. Chapman, I'd be curious from you as well. I know the sheriff doesn't share a whole bunch of what his numbers are, but can we have a look back for the last 10 years and see the number of deputies we've had on the streets? I'd be very curious on what the head count has been for boots on the ground deputies, and see what the trend really is, see what's going on.
We can try to get that information for you.
Thank you. The other comment I'd like to make is the money we spend in the jail with the federal inmates. We're doing very good. Obviously, they're not funding the jail, but they're really offsetting the cost for us there. I think it's a terrific thing that we need to keep up. And I hope that, this board has supported it in the past, and I look forward to your cooperation and help from the future as well. I look at the sheriff's department as investing in the future. I have a savings account. The wife and I have our percentage that we don't want to fall behind, because the same reason the county's got, in case we both lose our jobs, in case something really horrific happens to our family, we've got cash reserves to make it through for a while until we find something different. I think that's something we need to do continuously, as we have been. But I also think it's investing in our future. When people feel safe here, they'll stick around. I'd like to point out the events on the West Coast, what's going on out there with their exodus of businesses, their lawless society that they have out there. They're showing us exactly the reason why we need to have a strong law enforcement, why we need to put bad people in jail. I agree with what that guy said earlier, that we need to focus more on early development, and that's our 10 or 20 years down the road plan is to teach respect, mutual respect for everybody. That's what I love about this board is we can have differences of opinions. Mr. Schultz and myself, we don't agree on everything, but we treat each other respectfully. I respect Steve because he's a good man, and I don't know, I think he might respect me, who knows. But I like the fact that we can have disagreements and still respect one another. I look forward to doing that. That is what we need to teach our young people. That's results we're not going to see for another 10 or 15 years. Most of us, probably all of us, will no longer be on the board, but that's exactly right. We need to start with the youth and go back to the basic morals. But that's my 2 cents. I understand what you guys are trying to do. I think under every budget amendment, Mr. Chapman does list where the next year implication is going to be and where this year's funds are coming from. And it always says reserves. We know it comes from reserves. We've tried to take from a different department before, and we were sued successfully over that. Anytime there's a budget amendment, it always is coming out of reserves. It is eating away at the reserves, which causes me to think more about it. But I don't see the necessity for this to tell us what we're already doing. Mr. Chapman, am I wrong? In every budget amendment, you do say where the funds are coming from?
Normally we do, if it's an increase in revenue or a transfer from another account or whatever, I believe that all the amendments that we've done this year have reflected that. I don't think, even with the sheriff's amendment that we did back for the Axon project, we were able to come up with monies to offset those expenditures.
Thank you. Thank you for the time, Mr. Chairman.
Sure, no problem. Any more questions, comments regarding this? Mr. Webster? Unmute your, there you go.
Yes. Okay. Thank you. I agree with what Keith said about the speaker system there. Sounds like you guys are all in an echo chamber. However, I could hear you. I'm going back to something that I believe the Mr. Rader, John, I think his name was, he alluded to something that some of us have talked about recently. There is that if we have a policy not to dip below that our minimum fund, reserve fund, then we should follow that policy. Otherwise, why do we have the policy? So one of two things, either follow that policy or change the policy. Pick a different number that you want to adhere to. And so what he mentioned to us there was some counties are as low as 20%, some are more likely up in the 30 to 40% range, which is what I'd rather see us at. I'd rather see us, once again, Keith alluded to his own personal family's finances and so forth. I agree with that. And I like to see ours personally the same way, but publicly, I'd like to see us stay at that minimum level and stop having to even mess around thinking about it, because that's where a lot of this discussion comes from. And then as far as some of these budgets go, including the sheriff's budget there, it seems to me we're working this backwards there, because it's like we're trying to work around the sheriff, but I think it's the other way around. The sheriff should work around what we have to work with and adhere to that. And it's just it's hard for me to understand, and it's very hard for my constituents to understand. I live in a very different, represent a very different district than Mr. McDonald does, obviously. So when he's in a very highly concentrated populous area. So when he asks that question of his residents, then they may say the safety is number one for them, which, by the way, now I'll remind you, all of us represent 14,000 plus in our individual districts. It just so happens my district geographically is very large, but I still have 14,000 plus in my district. So being very large, I have a lot of agricultural area, obviously. So when I ask that question, the same thing, when I have some meet and greets there, I hold them at the community center at Duran Bank. Anyways, when I ask that question, the answer to them, from them, is the infrastructure, roads. That's their biggest concern out there, out in the sticks here where we live, is they want a good road to drive into their jobs if they go to Rockford or not, but they want a safe road to drive on. And that's the difference between the districts and the needs of the districts that we live in, I guess. But overall, no one out here in my area really has complained much about the service they get from Sheriff's Department or from our little local villages and their police departments and so forth. They feel relatively safe out here in my area, I can tell you that. Thank you.
All right, any other comments, questions? Yes, Ms. Marilyn Height-Ross?
Thank you, Mr. Chairman. I just wanted clarification for myself and other elected officials. When you say that you're going to identify revenue increases or budget reduction, does that include our offices? That's my question.
The answer would be yes.
Okay, so I think, and I'm speaking on behalf of my office, certainly if you're looking to reduce my budget, I would have a strong objection to that. My budget should not determine what you do with the sheriff's budget. If you choose to grant the budget amendment, obviously that's your choice, but I would have a very strong objection to you looking at reductions in my budget to cover the budget amendment. So I wanted to share that with all of you since I am in the meeting and I wasn't sure what you meant by that language. And I would venture to say that other elected officials would probably want to know if their budget is being considered to be reduced because you want to cover a budget amendment. Thank you.
No comment, but Mr. Fiducia?
Yeah, my question is, has the state's attorney's office stated, what their budget was this year? I believe so. Okay.
We are under budget, Mr. Fiducia.
Okay.
We were under budget last year. Thank you.
This makes a particular, something particularly hard for me to wrap my mind around, because my mind's not that large, I guess. But what I'm finding here is Mr. Salgado, this committee is looking at ways of funding us. Now, and this is why I'm still, not my question to answer. We're just talking about this $2.7 million.
Right.
If we pass that, that will come out of the reserve.
Right, unless we can identify, as like I clearly stated, the objective is for any organization, department, or any elected official, whenever they come before as a budget amendment, we have identified potential reductions. So let me give you an example. Say, for example, the commissary funds or whatever, based on that, can absorb some of this increase that they're requesting. That's where the reduction potentially could come from. I'm not saying that's where it's going to come out of, but ultimately identify when a budget amendment comes through. I know Mr. McDonald's point of view is, well, it comes out of reserves, but that does not mean that I can just come before a finance committee and say, I'm going to be overspending by. You have to identify and explain why this is occurring and what my corrective action is. So essentially it does not happen again, because there could be one-timers that occur, but if it continues to be the same thing over and over, we have to look holistically across the board and make a determination what the cause of corrective action needs to be done, right? And so look within, it forces the individual department to kind of look at themselves and say, hey, is there any under the rocks, any money available that we can absorb this 2.7, 100,000, whatever it is budget amendment. Ultimately, what we don't want to do is just take it out of the general fund from that perspective, right? But have that conversation. And I was going to talk to it, but because we're in this discussion about this, but I'll give you a perfect example. You know, from a county board standpoint, we should have objectives and goals that we want to accomplish. I think that's why we spent with NIU saying these are our priorities that we want to focus on, right? So if we decide public safety is the number one and number, you know, we go down the list, whatever the case may be, then that's how we allocate the funds, right? When there is no money available, right? And so from that perspective, it eliminates the issue of favoritism or that we're attacking certain departments because we feel it's not important or whatever, but we base it on our priorities, right? On what the constituents, what the county board members, because we represent constituents across the county, right? And so that's why we met with NIU and we said, these are our priorities that we want to focus on. Economic development. We want to focus on this. So we start allocating funds, but we haven't got there, you know, whether whoever was responsible for that to initiate that discussions. I'll give you a perfect example. Park District, you know, they do their annual survey. They go, they send it out. What are our top priorities within our community that we serve? And one of the biggest things that came out was golf was not one of the biggest things. And so what did they do? They took action and they said, we're going to start cutting golf. One of the biggest parks that was supposed to be shut down was Sinisippi Park and that 9-hole course out there. It was an uproar. Individuals got upset. Well, I don't think it's right. But they were following what the survey was done so they can allocate. If there's a deficit, they can make strategic decisions and they're not just making it for favoritism or attacking certain items that the Park District was doing. Now, people can argue, well, that's not good, but there is a process that's involved. And so what we want to do here is make strategic decisions. Not only that, but hold departments accountable to essentially rein in the costs and revenues expenditures. So it does not implicate, as Marilyn Hyde-Ross has explained, that some of the impact could be across other departments. Now, people could argue, well, they might have an issue and it's going to be lawsuits for funding. That could be a possibility. But in the end, what we're trying to do here is to ensure that if there's an ability to reduce the cost, then just saying, hey, just take it out of the general fund and let's not absorb it or whatever the case may be. This is a good starting point where we can have, as Mr. Arena alluded to, having that conversation, because we will have to make those decisions when budget comes around that are very unfavorable, right? We have to look across the board. Mr. Chapman will get into the budget discussion. I don't want to get into it, but because it's been coming up here in conversation, and Mr. Chapman can allude his projection where we're going to end up. Decisions are going to have to be made regardless of what direction we want to do. They may be unfavorable, whatever the case may be, but that's why I guess we get paid the big bucks, as I always say, right, as county board members. So from that perspective, I just want to be clear on that. And hopefully that answered the question, Mr. Kadusha and Ms. Marilyn Hyde-Ross on that piece of it. So
I feel bad that there are departments out there that are following their budgets and they feel like they're going to get cut for being, you know, doing their job properly. I apologize to them for that, and I don't want to make light, but I get upset, especially at the state's attorney's office, when a starting person makes less than a starting deputy does over there, and they have just as much responsibility in making sure those cases get through the courts, because the you know, you want to talk about public safety, Mr. Salgado, your policemen are only as good as the people that in the corrections and courts are. And I believe the state's attorney's been getting the ride of the stick for a long time. They need more people, but once again, we're talking $2 million. So just once again to follow up, this resolution is just saying we need to find, because I don't want to support this. It's stupid for me to support this. And then I'm going to vote to give the sheriff the money. Sheriff gets the money. We should have something, this should be in place first, right?
That's correct. And that's what it alludes to in the language, if you look at it.
Okay, it's good.
Furthermore, resolved that a summary of the revenue increases and budget reductions shall be presented to the Finance Committee prior to the approval of the budget amendment.
So where else could we find it?
Exactly is the conversation that if all is gone through the process, the situation when it's going to come out of is the general reserve fund, right? That's where the money would come from. In the end, yes, Mr. Hoffman.
Yes, Chairman. As I sit here after like 8-9 years of doing the budgets, this has been the plan that we've said it, but we've never had it in writing. This is how we're going to go about finding the money. But I fear, and I think the idea is a good idea. I fear though that we've already done this for years and we've already stripped all the other departments down to bare bones. So I think it's an uphill battle. At least maybe we have no chance of doing this, but I understand completely why you're doing, why we're asked to do this. And I think it'll more show the support that we cannot find the money, then we will be able to find it. So, but I do appreciate the thought behind it. Thank you.
Any other questions, comments? Yes, Mr. Schultz.
Anyways, Chairman, just a couple of additional thoughts. One is that, we have to have balance in our system, because if we don't have money at least to cover the basics of what it takes to run the various departments in our criminal justice system, then we have experience that tells us that the whole system shuts down. And the people will languish in the jail if we don't have the public defenders, if we don't have the state's attorneys, if we don't have the system that provides. So we are, forgive me, acting like that is not a reality. Okay, that's my opinion. The other piece is we do have an easy way out, which I hesitate to say it, but I'll put it out there. The fact that many of these other budgets, one of these other departments have spent less than they budgeted, means that there are budget amendments that we could make in those areas that would not take a dime away from anybody because they already saved it. But it would, by giving the assignment to Mr. Chapman, it would at least bring visibility to that. So if we had a budget amendment that had all this additional spending by the sheriff, but had negative offsets based on what actually has already happened, we're almost at the end of our fiscal year. At a minimum, it would bring visibility to those departments that saw the fact that we were in a difficult year and managed their resources accordingly and didn't spend everything that they were given. And giving Mr. Chapman that assignment, I think, is a worthy endeavor.
Thank you, Mr. Schultz. Any other comments, questions, concerns? Mr. Webster, go ahead.
Yeah, thank you once again. Listening to a lot of this discussion tonight, I had flashbacks to probably 10 years ago or so. And at that time, our budget was up to 220 million or 225 million. I can't remember. But I'm listening to these things and I'm listening to the cautions and warnings from Mr. Schultz. And he probably remembers back to then. He's been on the board that long as well. That year, we had to cut like 20 or $30 million in 1 year out of our budget. And thinking back on this, I'm thinking, why did we have to cut that much out of that budget? And it's probably because of warnings that we got 2, 3, 4 years in advance from Mr. Schultz that we were probably spending more than we needed to on some programs or what have you. But that was the most serious year that I can possibly remember. If I'm jogging anybody else's memory on that, but if we keep going the way we're going, we're going to wind up in a situation like that again in the near future and having to make some super drastic cuts. And back then when we did that, oh my God, it was slash and burn everywhere. And I'd hate to see us go back to that again. I hate to see our employees get laid off, for example. That's the last thing I want to do is put anybody out of work. So I hope we can work this out, and I hope that everyone can work within their budgets, because just because a department, going back to what Steve was just saying there, just because you get that much money allocated to your budget, some, and I've worked at places before where they've done this, some of them say, oh man, you know what? We got to burn this money because we're going to lose it if we don't spend it. And that's wrong-headed thinking. You know, just because you got that money allocated to your department, you don't have to spend every dime, particularly on trivial things that you don't really need. And so if you leave that money in the budget, into your budget, it carries over into the next year. Yeah, I don't know if that makes any sense to any of you, but that's the way I look at it. Thank you.
Thank you. Any more questions, comments? Yes, Mr. McDonald.
Thank you, Mr. Chairman. I'm just curious out of State's Attorney Height Ross, how much was your budget cut 19 to 20 or 18 to 19?
My budget wasn't cut. We were going to be cut approximately 2 attorneys, which was not workable. So I asked for those back, and then I asked for 4 more attorneys. We are funded for 48 attorneys. We currently have 43, including myself. I am in the process of hiring because we need additional staffing, but as Mr. Fiducia rightfully recognized, the challenge is the low starting salary that we have for our incoming assistant state's attorneys. So that is why I am currently under budget, and I am working within the budget that was given to me, but I have positions that need to be filled. So the fact that I'm currently under budget doesn't mean that that's money available to amend my budget, because I still need to staff my office. Again, I am part of public safety. I know most people don't think of us in that way, but the state's attorney is charged with filing charges and prosecuting individuals and bringing them to trial in a timely fashion so that their constitutional rights are protected. And I can tell you that my assistants work very hard to do that, even though in most of my felony courtrooms, I only have 2 assistants working in handling caseloads of over 300 cases, very serious cases in the felony trial division.
Thank you, State's Attorney Height Ross. And I agree, you very much are a part of the public safety.
All right, any other questions, comments before we take a vote? All right, seeing none, I'm going to take roll on this. So the item before us is a resolution identifying revenue increases on budget reductions to offset the sheriff's budget amendment 2020-020 increase of $2,723,523. And I will start with myself. I'm a yes. Next person, Mr. Hoffman. Yes. Mr. Girl.
No.
Mr. Fiducia. Mr. Schultz.
Yes.
Mr. McDonald.
No.
Mr. Butita.
Yes.
All right, so 1, 2, 3, 4, 5. 5 to 2 is the vote. The budget, the resolution passes. Our next item is 2021 budget discussion. And yes, go ahead. So we're gonna wait. Mr. Chapman has to, I believe, put something on the screen. No? Okay.
I don't see him.
Okay, shouldn't have been on. Okay, sorry.
So Mr. Chapman's passing out essentially the budget. Mr. Chapman, did you forward this?
Yes, you should have it in your email.
You should have this packet in the email. It's essentially the projections for this year and the budget for 2021. So I'll hand it over to Mr. Chapman and he can walk us through.
Okay, thank you, Mr. Chairman. This reflects the budget summary for the general fund and the 1% public safety sales tax fund. We're still working on the other funds at this time, so hopefully we can review those next week. I'll go through the sheets and add, and if you have questions or if you want additional time to take a look at it, that's fine. But the 2020 budget summary that's on the first page reflects our estimates and so on relating to the general fund and the 1% as far as what we anticipate for revenue for this year. Again, that's a difficult number given what's going on with this the COVID situation. I guess we did the best we could and trying to use the most up-to-date information that we have as far as receipts and then projecting that out into through the rest of the year. You have to remember that a lot of our major revenue sources are sales taxes, our income taxes, replacement taxes, etc. Because of the accrual basis that we do and the fact that those revenues are about 3 months behind, we don't actually get the final revenue that goes into this fiscal year until December. So it's like that every year, obviously, but this year is obviously much more of a challenge given what's going on with the COVID and how people are spending their money and so on. But in terms of the revenue side, general fund revenue, we're estimated at $54,260,000. If you go to pages 4 through pages 4 through 12, it shows the detail items relating to that general fund revenue. Reflects what we're projecting for 2020 and also what we're projecting for 2021 for the various revenue sources that we have. Again, for 2020, we're looking at total revenue $54,260,000. Expenditures and transfers, again, this best guess in terms of expenses. We probably still have 2 months at least of expenses because we're always a month behind. So 2 to 3 months because we have to accrue everything through the end of September. So expenditures, $50,200,000 gives us revenue over expenditures of $4 million. We're looking at the ending fund balance at the end of September of $24.8 million. The public safety sales tax, again, this is the biggest revenue source is the sales tax. So
Obviously, that's again, a difficult one to project, based on what's going on, but, total revenue, 26.3, expenditures and transfers of, 33 million, revenue, over, actually, expenditures over revenues of, about 6.8 million. That leaves us with a ending fund balance of about 1.3 million negative. And we'll probably end up having to move some of the expenditures from the public safety sales tax over into the general fund, primarily in the public safety areas where both departments are aware. Many of the departments have budgets in both areas to get the public safety sales tax fund balance out of the negative. We want to show at least a positive balance in there at the end of the year. If you combine the two numbers for general fund and 1%, looking at about $23.5 million. And if you look at that strictly as a percentage of expenditures, it would be about 28%. So that's this year. Let's talk about next year. That's page 2. Again, estimated revenues in the general fund about 56.4, expenditures about 55.4. So revenues over expenditures a little under $1 million. With an ending fund balance of about 25.8 million. Public safety sales tax revenues about 27.7. Projected expenditures of 35 million. Expenditures over revenue about 7.3 million. And if we let that go on, we have an ending balance of about 8.6 million. You look at the combination of those two fund balances, about 17 million, which is about 19% of the expenditure. So, if you go to page 3, that reflects the different revenues and expenditures. Again, going back historically back to 2017 and going forward to the next budget year. If you go to page 12, no, I'm sorry. Page 13, that's the same document for the public safety sales tax fund. Again, reflecting the revenues and the expenditures. Going on to page 14 and 15, reflect the different individual budgets, what the 2021 budget is, and what the 2020 budget, the original budget that we had approved last September by department, by category. You can see the different increases. Biggest increases are probably in the public safety area, county jail, county sheriff. Those budgets reflect the request from the sheriff that, in essence, funds the current positions that are in that particular department. It also funds the inmate medical contract that was not funded last year in the budget. I felt we needed to include all the costs in the budget this year, and then go from there as far as what reductions and so on that we made. The next page, page 15, reflects the public safety sales tax part of the budget, again reflecting what the 2021 numbers are to 2020. most of the increases are reflected in the sheriff's budget, again, based on funding of the positions that are currently involved in that department. Pages 16 and 17 and 19 reflect the individual departments and explanations, somewhat relating to the increase in budgets or any other thing that may be reflective of the individual budget. The one thing that we need to remember is, as far as personnel costs, we're probably looking at a flat insurance cost for next year. We've been doing very well in terms of our medical side, and we're anticipating going forward with a new pharmaceutical plan that's going to hopefully save us money and so on. So from that standpoint, personnel costs, the health insurance costs are pretty much flat. The ASME agreement that was approved, I think, 2 or 3 years ago for the ASME employees that are employed by these particular departments reflects a 2.75% increase effective January 1. I believe the FOP, the course, which covers probation and detention and so on, I think they were increased 3% based on their contract. At this time, with the non-bargaining, there's no individual increases reflected in the departmental budget. If there is any adjustments for those individuals, they would have to come out of the contingency budget that we set up. So, I guess with that, just a couple of comments with the deficit that we're looking at. We are trying to finalize the other budget and come up with some, I guess, recommendations or thoughts relating to not only reductions, but also maybe possible transfer of funds, this and that to reflect a more balanced budget. As far as the property tax levy goes, we included in this budget the increase for new construction. I think it was about $180,000, and also we included, I believe, about $40,000 for the fact that we got to give the city an additional $40,000 for the election tax based on the formula that's in place. I believe we still have up to the detail amount, we could generate an additional $800,000 in taxes. We're looking at the assessed valuation going up 5%, a little over 5% again, so that's good in terms of growth in the county and so on. But we need to look at the property tax issue and see if the board chooses to want to do something with the additional revenue there to offset part of this, or maybe offset any other increases that we may have.
Thank you, Mr. Chapman. Is there any questions regarding the projections and essentially the draft of the 2021 budget that we currently have before us? I don't know if there are any questions from the, yes, Mr. VP, I think that's you.
Yeah, thank you, Mr. Chairman. There was a pretty muddled conversation that I couldn't understand because of the speaker situation. So I've got a lot of questions. I'm not going to ask them right now. I'm probably going to reach out to Mr. Chapman to have him go through in detail this budget with me. But I think in the future, at least, well, we got another 6 weeks before we have to get this budget finalized. I think it's going to be important to do these things in person. If this didn't seem to work real good tonight. Most of the Zoom meetings I've done have worked well, not tonight so much. So, Mr. Chapman, I'll reach out to you. Hopefully I can get those questions answered without tying up everybody else's time. And going forward, we can handle these meetings maybe a little better. Thanks very much.
All right, Seaman, I do have a couple comments, if you don't mind. So the first comment I'll make is, please look over the items that Mr. Chapman has distributed via email. I didn't see it in my inbox. That's why I was kind of like concerned that I was like, we got something. But anyways, page 2 is the critical piece of the biggest ticket item, which we will have to make decisions, which predicts obviously, you know, our tax levy if we want to take it to the full extent, which Mr. Chapman kind of alluded about 800K, give or take, additional to offset some of the actually ending funding balance in the 1% public safety tax. He's projecting 7.31 over expenditures in that fund there. So I just want to highlight at the end, it looks like we'll be at a 19%, below that 25%. So discussions will need to be made, what direction we want to move into. So I'm giving you things to think about on this proposal that Mr. Chapman kind of just gave a quick projection. Obviously, there's other discussions going on internally that departments might have, and those are fair game as well. But I just want to reiterate, please look over the information, look at page 1 and 2. It's a quick, nice, easy summary. If you want to dive into, the additional pages are there with clarity. If you want to look at revenues, where revenues coming in, cannabis, whatever, you know, whatever the case may be for the revenue projections that were alluded to. But I just want to point out where we might end up in the budget if we decide to do nothing, right? Which is that 19% below that 25%, which combined is about 17 million in change that we would end up in our fund reserve. And at 25%, we need to be at 22.6%, which is about a $5 million gap that we want to essentially, if we want to move into that direction, or if we want to spend every single penny in our fund reserve, that's our prerogative, right? But I'm just pointing out things so everybody can start questioning or start strategizing potential solutions or ideas on that sort. So 17.1 is where our fund balance would be based on the projections for 2021 budget. 25% is 22.6 million. Where we would have to be at that 25%. If we want to be there, it's a $5 million gap that we have to essentially figure out where we're going to either reduce or find additional revenue to offset that. So I just wanted to point that out. So quick summary, please look it over. If you have any questions, we'll have additional meetings with Mr. Chapman and the Finance Committee. Like I said, tax levy will be discussed. Mr. Chapman took the new construction piece of it. So that's already incorporated. What's not incorporated is that CPI, that percent tax levy that's still available, which would be about 800K. So just wanted to point that out, highlight high level. If you have questions, I know the sound is pretty crappy, I hear, but hopefully everybody has heard this. And if you have questions, reach out to Mr. Chapman, myself, you know, or whoever, you know, whether it's Molly's as well, so department. So with that, are there any questions before we move on to our next item? Yes, Mr. McDonald.
Thank you, Mr. Chairman. Just to go, Mr. Webster, Mr. Butita made the same comment as I had earlier. From now on, especially during this budget cycle, can we not have a Zoom option and just meet in person?
Yeah, absolutely.
We're here.
No,
Well, then I will not be in attendance, just for what that's worth.
right, and so we leave it up to those that can come in, and one of the reasons was because I thought the auditors were coming in. So I'm like, oh, I'm gonna be there present. But from that perspective, I do agree with the handouts that are currently, were forwarded. And maybe some of the individuals didn't get them in the email or whatever the case may be. I do agree with you. We'll have that option. We'll still keep the Zoom if for those that want to Zoom in, like Mr. Schultz. It makes it easier on him. Mr. Butita was one of those individuals as well that, kind of wanted to do the Zoom as well. So there's other members, but we'll keep both options. We'll have the present and also the Zoom for, during this COVID session that we're currently doing. So absolutely, Mr. McDonald, I will do everything possible to get everybody in the building if we can. And for those that, feel comfortable from home and Zooming in and because of work or whatever the case may be, we'll move in that direction. Any other questions regarding this? Seeing none, we'll move on to the next item. Thank you, Mr. Chapman, for all the hard work that you've been doing on that. I appreciate that. Is a release of demolition lien, and I don't know who can speak to that, Mr. Chapman, or we can table it.
I believe Mr. Gilberti, if he's not still on the line.
Yes, this is a lien on a property, a demolition lien on 216 Woodrow Street. The trustee of the county delinquent program has requested this lien. It's approximately $9,000 demolition lien. There were other liens on the property that were brought to my attention. And after talking to Mr. Chapman, some other liens that were approximately $1,000, we decided to release, but then it was brought to our attention that this was a property the agent trustee was trying to sell, and this was an obstacle to selling this property. So they've requested that the county release this lien again. It's a demolition lien that the county has on the property of about $9,000.
I think Mr. Gilberti and I spoke, and there would be the approval of the committee would be, it doesn't have to go through the board.
All right, so then I guess what we'll do is we'll make a motion, and so can I have a motion to release of the demolition lien on Woodruff? I believe it's Steve. Mr. Hoffman, can I get a second? Mr. Padusha, thank you. Mr. Gilberti, do you is there any other additional information regarding this lien that we want to release other than that what you just said?
No, that's it, Mr. Chairman. Thank you.
All right, are there any questions regarding the demolition lien? All right, seeing none, let's take a vote. All in favor of approving the release of the demolition lien, please signify by saying aye. Aye. Opposed? All right, the ayes have it. Thank you, Mr. Gilberti.
Thank you.
The next item is pending litigation. Can I get a motion to go into closed session? Mr. Padusha, Mr. Hoffman, thank you. Before we do that, I have to take roll call. Myself, yes. Mr. Hoffman.
Yes.
Mr. Girl.
Yes.
Mr. Padusha.
Yes.
Mr. Schultz.
Yes.
Mr. McDonald.
Yes.
Mr. Butita.
Yes.
All right, before we do, I'll just have to read this disclaimer. Litigation is when an action against affecting or on behalf of a particular public body has been filed and is pending before the court or administrative tribunal, or when a public body finds that an action is probable, imminent, or in which case basis for a finding shall be recorded and entered into the minutes of a closed meeting. So we are now going into closed session, and we'll be back to essentially go into the other items.